Okay. I now have I now have enough information to solve this problem. Okay. So trend is very very important. Okay. Trend is very very important. Trend is very very important. All right. Okay. Trend is very very important because if I don't know what the trend is, then I'm going to lose. It's a coin flip. Okay. If I don't know what the trend is, it's a coin flip. So I have to figure out, based on the information that I have, what the trend is. Up, down, sideways, or whatever it is. I have to figure that out. Just the last trade that I had was it was a range bound situation, and I top ticked it thinking that it's going to go up. I made that mistake so many times, and I just wasted 1 month of work on a phase two challenge after spending a month to get it to that point. So then I have to figure out. Uh, See, that's where all these setups come in. All these setups are defining. All these setups are defining what the trend is, because these setups are pointing to a direction of where it's defining the trend. All these setups are essentially what it's doing is this showing what the trend is. All these setups, every one of these setups are showing what the trend is. Simply put, that's all these setups are meant to show what the trend is. That's what it is, essentially. So, so how do I define how do so that's it. Okay, so it's so simple. It's so simple. It's so simple that I'm at a loss for words. Okay, it's that simple. So so then what information do I have so far? What information do I have so far? So when I look at these, there are candles there, and these candles show what how they're related to from what the past information is and what the current information is. So if for the past 20 candles it's been going down, then it's saying something about what the current trend is and what the predictability of that current next one is. So what are the major influences of these these things? Okay, so there's support and resistance areas, right? That have been established previously to the left side. So when the price is moving either down, okay, with the 20 candles are showing that it's going down, then it's going to be moving towards either the support or resistance. And so at a certain point where the support and resistance is, there's going to be some sort of reaction that's going to occur, okay? So when I enter into the trade based on what the behavior of the candles are and how it is related to the support and resistance, okay? Then that information allows me to have an idea of what the next candle is going to be. So that is, and what these will do is the setups will show what's going to. So the setup is also going to show what the next candle formation is going to be, possibly, right? So those are the three things that I can use. Okay, those are the three things. So if I would write that down, okay, I'm gonna write that down. There are other people are using like Fibonacci, whatever that is. I'm sure it works. So the first one is left side candles. Two, the support and resistance. However small these things are, okay? However, it's 9 o'clock, okay? It's almost 10 o'clock. It's 10 o'clock. I'm not trading right now. I could trade right now, but it's a waste of money, a waste of time. There's no point unless I figure this out. It's a complete waste of time. Okay, it's a complete waste of time. I need to figure this out. Okay, so based on what Al Brooks is talking about, he describes the candle structures. He talks about structures. Okay, so that's where many of these professionals talk about structures as well, right? Some people talk about break of structure when something changes. Structure essentially is a narrow narrow trend. Okay, narrow whatever. I forget what he talks about, what he says about that. Okay, so what did he say? Anyway, something like that, right? Narrow band trend. Okay, so when the price breaks out of that, then it's called a break of structure, right? So it's like a uh, so apparently it's just a breakout, right? It's a breakout. It's a breakout structure, right? That's something that I can use, right? That's what I can use. Okay, so left side candle structure, support and resistance, right? And I can see, I can so immediately speaking, support and resistance is going to be on a, is it going to be range bound? Uh, is it a wide trending? Wide band, right? Okay. So those are the things that I can look at when I make these trades. All right. What else can I look at? What else can I look at? What else? So the candle structures provide some clues too, right? The candle structure provides some clues. So what other information can I use to figure this out? So what I need to do is I need to look at these charts, really look at it, and see if I can recognize the elements that are being taught by Al Brooks. Okay. So when I recognize what Al Brooks is talking about, then I know what's going to happen next. Also, I have to be able to manage my trade. Just today, just this morning, it could have been very, very different. It could have been, was it yesterday? It could have been very, very different. I could have had a very, very good, because what UC did was it actually popped up in my direction, but I didn't sell, and so I saw it go to a very. I was at like 5%, and then I didn't take the profit, so it just started to drop, and he erased all the gains, and then made me lose. Okay, so all these things I have to incorporate into my trading in order to do it right. Okay? And what the market is showing is essentially a partial formation of of the setup that I have in mind, right? And so it's difficult to extrapolate and to figure out how that works. Once I figure it out, once I figure out the major indicators of what's happening, then I can use that to to do some back testing, right? So what I can do is I can say, okay, I'm going to use this to place around a certain formation, and then I'll think about, okay, so I'll figure, okay, so I'm going to do this and see what happens on the next candle. All right. And then once I get really good, then the idea is to make enough trades, yeah. It's amazing to me that I didn't sell even though I made 5%. Okay? It's amazing to me that I didn't sell even though I had 5%. I was watching it. It was at 5%. I didn't close it out. That's a big problem right there. That would have been 6 plus 3. That would have been 9% from the current account value right now. So essentially what I need to do is to transform myself into a professional trader. A professional trader behaves in a manner that fits a professional trader. I've been working as a dishwasher for almost now 4 years, okay, going on 5th year. All right. And then the owners have this meeting once a year, and one of the owners is the a Catholic deacon. And he talks about character. He talks about a character. What is a character? Character is a definition of an entity with a description that defines that character, right? Trading is the same way. Professional day traders have a certain character. That specific character allows a person to be consistently profitable. Okay? That person has to have that character. I could have made money on there. So I have to think in a manner that fits into the way that I'm trading. So that either I'm going to be saying to myself, oh, I sold too soon, which is probably what I want to say. Okay? And when I lose, I want to lose as small as possible. All right? Even if it turns around, I want to say, hey, I want to lose as small as possible. That's one of the characteristics. That is one of the characteristics of the character that I want to define as a consistently profitable trader. And I want to say to myself at this stage, okay, at this stage in my trading career, I have to put a stop loss. Okay? I heard some of these pros, they don't put stop loss in there. But for me, I have to put a stop loss in it. Okay? That's something that is what I need to do. So if I were to step through, okay? If I were to step through the process of trading, okay, I'm gonna step through the process. Okay. I see the price. Okay? I see the price. And when I look at the price, what's the first thing that I need to look at? What is the first thing that I need to look at? I look at the price. Okay? But what is the first thing that creates so what is the first thing that I need to look at? Okay? What is the first thing? What's the first thing that I need to look at? See, you don't even know what the first thing you want to look at. And you're trading. You can't do that. But you've been doing it. No wonder you're losing. Okay? In the past, when the market is going up, you just entered and that was it. You didn't have to do anything. Okay? You didn't have to do anything. That's why you're losing. Okay? You don't even know what the first thing is to do. That's why you're losing. No wonder. Okay? You didn't deserve to pass phase 1. You hear me? You didn't deserve it. You and I, we're gonna have a really good we're gonna have a really good talk, you and I, okay? You and I, we're gonna have a really good talk. Tonight, you and I, we're gonna have a really, 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 really good talk, okay? I don't have to roll up my sleeves here, okay? I'm just wearing a short sleeve. You and I, we're gonna talk really good today. I don't care if it doesn't make any sense, whether I'm grammatically correct or not. You and I, we're gonna have a really, really, really productive talk, okay? Today's Wednesday. There's only 2 more days left, okay? This week. And you're an old man. But you and I, we're gonna have this talk. You and I. Mano y mano, okay? We're gonna have this talk. Okay. So when you make a trade, okay, it's like, let's put it this way. You are having a talk with an experienced mentor, okay? Think about that. You're having a honest conversation with a mentor. Just put it that way, okay? That's what you're doing, all right? So the mentor is asking you this question. What's the first thing you're gonna do? And you don't even know. You're hesitating. You don't even know. It should be just obvious. It should just be right there. You should be able to know what you're supposed to do. You have to know exactly what the first thing is to do, okay? So let's logically figure this out, okay? This is clearly telling you that you're not even ready to trade whatsoever. No wonder you lost these. Your brain is in a la-la land, okay? You and I, we're having this conversation. We're having this dialogue, you and I, okay? You and I, we're having this dialogue, all right? You and I. Okay, so what's the first thing? Okay, so you want to, so obviously there's a chart and you're looking at the price of a particular Forex pair, okay? You're looking at the Forex pair. So let's make it, okay, let's go with the UC. Okay, let's say it's UC. Okay, so now you're looking at it. You're looking at it, and so you have to define. You have to decide. You have to decide what the trend is. Okay. The first thing you have to do is define what the trend is. Right? That's the first thing you have to define. You have to define a trend. We're going to solve this. Okay, you have to figure out what the trend is, all right? Okay, let's trend. Okay, how do you define the trend? So how do you define the trend? Okay, so I'm looking at the current price. That doesn't tell me what the trend is. Okay, that doesn't tell me what the trend is. So how do you, so how do you define a trend? How do you define the trend? You don't even know. So how do you define a trend? You define a trend by categorizing it, whether it's range bound or whether it's in a trend. Okay? Whether it's in a trend or whether it's in a range bound situation. That is the first thing you want to look at. Okay? That is the first thing you want to look at, right? So how do you define a trend? You want to look for the trend. Meaning, is it narrow band, wide band, or is it parabolic? Okay? All right? Then you want to see whether it's going to be range bound. All right? So whether it's very similar to what the trend is, wide trend is, but is it moving sideways or not? Okay? That's the current situation. So then what time period are you looking at? What time period do you want to trade? Okay? What time period? Do you want to trade the 1 minute time period or do you want to trade the 5 minute time period? Okay? because it's going to be different. So if you see, you haven't really talked about this at all. So there is a support and resistance inside support and resistance. The support and resistance inside the support and resistance is based on the time frame. The 1 minute time frame will have its own support and resistance. It's going to be weaker than a time frame for the 5 minute, because the 5 minute time frame is going to be stronger because it's going to be wider. And as the time frame increases, it may or may not be stronger. So you can look at it. So if my interest is to trade the 5 minute time period, then I have to look at what the previous trend is so that I can get a bigger picture of what the overall trend is going to be. Then I can fit that into my current 5 minute time frame. And for giggles, I can look at the 1 minute time frame to see how it correlates, to see what the expectation will be for the price to stall at a point where the 1 minute time frame is doing the support and resistance area. Because I can expect it to stall at that point while it's on its way towards the 5 minute support and resistance. Because ultimately, that is, if I want to trade the 5 minute time frame, that is essentially where it's going to be, right? Okay, so now what I'm attempting to do is define which direction it's going to be, and that direction can be defined based on the structure. Is it trending or is it range bound? If it's range bound, then it's going to move sideways. I see the direction. If it's trending, I can see it, whether it's going to be parabolic, narrow, or Y-band. Is it going up? Is it going down? I can see it for whichever time frame it is. I can see that. I can identify it. Okay? I can identify what the trend is. Okay? Is there anything else that I can use to identify what the trend is, right? So then I can also look at a particular setup kind of a thing, right? You essentially have support and resistance. You also have a break of structure that occurs, okay? Okay, so support and resistance essentially is encasing the price movements of a structure. But if it moves into a different structure, it breaks out of that support and resistance area, so it's going to behave in a different way, right? So that's how I can tell. Okay, so that's how I can tell how the trend is. Okay, so I'm going to practice that as well. I'm going to, after talking about this, actually apply it and then hone in and polish and manipulate it into a workable solution. Okay? So that's the first part of it. So I can identify it, then I can go with the size. So what is this? Then I have to define what the support and resistance is. What is the support and resistance? Okay. Where is the profit? Where's the profit target? Where's the stop loss that I have to define? That is critical. It is incredibly critical in my trading. I have to know what that is when I make that trade. Okay. When I make that trade, I have to know where that is. I have to know where that is. Otherwise the risk that I will be committing will not be correct. And so it could cause my account to be breached. Okay, that's the other part. Okay, so I got that out of the way. So I can figure it out. So I identified that. I can look at the time frames. So the first thing, okay, so how do I answer that question? So what's the first thing that I want to look at? Okay, so I want to look at the structure. Okay, I want to look at the structure based on the current time frame that I want to trade and the time frame above, and identify, see if they correlate. Okay, that's what I want to do. Okay, and then if I want to fine tune my entry, then I can go into a lower time frame and then figure out where the best entry point is, and I can do that. Okay, so what I can do is I can practice. I know it's cumbersome, but I can use 3 time frames to enter into the trade. Okay. Identify where the support and resistance is for those three, and then figure out what the structure is for those three, and see if they correlate. Okay, once I identify that they correlate, then I can fine tune it with a lower time frame to enter, and also to figure out where the support and where the stop loss and profit taking point is. Okay, that's the next step that I can look at. As soon as I identify where the stop loss is, then I can put in the right size to put the right amount of risk on and let the trade run. Okay, and automatically, I don't even have to worry about that. Okay, because I've already identified where it's going to be. It's not something that I had in this case where it was up 5%, I didn't sell. That's wrong. That's obviously wrong. Okay, that's obviously wrong. I should have had a profit target. Okay, I should have a profit target for each and every one of the three. This is after blowing this is after breaching two accounts today. We're talking about a month of work gone, wasted. Okay, so this is very critical. This is very, very important. This is for your future. I know the 5K is nothing, but that 5K will translate into 100K. Okay, as soon as I get 3 payouts on the 5K, then I can go into the 100K or the 50K, and that's where serious money comes in. That's where I can afford to get a room here. Okay, that's the goal that I have. In order to get there, I have to polish my strategy. I have to polish my strategy in order to get to where I want to go. Until I do that, I have to keep polishing it until it fits in every day. Okay, every day. It has to fit in every day. Okay? So now I figured out what the profit target is. Now I don't have to worry about, oh, did I sell too soon? Did I sell too late? I don't have to worry about that now. I don't have to worry about it now. Okay? Because the profit target that I assign and the stop loss takes care of that automatically. Okay? Now, here's the other part that has been a problem for me, right? When I lose my mind. Okay, I lose my mind. So how do I mitigate that? How do I solve that problem? How do I solve that problem? How do I solve it? Okay? So each day I can set this. So currently what I'm doing is what I want to do is maximize it later on. So my efficacy, so what I would do is I'll plan it to have 3 losses. 3 losses and I'll call it a day, okay? I'll have 3 losses. I'll have 3 tries to make it work. 3 losses and the day is over with, okay? That's the plan. That's the 3 losses. If I lose 3, whatever happens, it's over. The day is over. I trade no more, okay? This is something that will be set in stone. Hopefully, okay? Hopefully I'll stick to that. But the idea is if I lose 3, eventually what I'll do is I'll risk 0.5%. I'll risk 0.5% to gain maybe 1% or 1.5%. Okay? So if I do that 3 times, then I can make roughly about 5% per day. If I can make 5% per day, then it'll take me about 2 days to pass phase 1. Okay? And it'll take me one more day. It'll take one more day to pass phase 2. That kind of thing, right? And so when I get a payout, that's going to be like 5% in one day. In 1 week, that's going to be about 25%, okay? I know it's ridiculous, but that's the idea. About 25% per week, right? So that's the idea. It's now crystal clear. So if somebody asks you, okay, so now you have a very good idea of your strategy, okay? Now you can define your details. You can define your details. But the first thing somebody asks you, okay, so what's the first thing you're going to do when you make a trade, right? What's the first thing? 20 minutes ago, you weren't able to answer that question, but now you're able to answer that question, okay? The first thing I'm going to do is define the trend. How am I going to define the trend? I'm going to look at the structure of the current time frame that I want to trade. 5 minutes, okay? I will look at that, define what the current structure is. Is it a trend or is it a range-bound situation? Okay? Is it going up? Is it going down? Is it going sideways? That's what I'm going to define. Then I'm going to go up a time frame. I'm going to see if it still correlates with the thought that I have with the 5-minute time frame. And then after I figure out what that is, then I'm going to go into a lower time frame, figure out the best entry point. Okay? I could save a little bit. I can fine tune it by going into a lower time frame and defining where the support and resistance is so that I can enter at a lower and a cheaper stop loss. Then I'm going to define the stop loss and a profit target, okay? I'm going to set that profit target, okay, profit target and stop loss, and I'm going to set that, okay? That's what I'm going to do next, all right? And I already know what other contingency plans that I have. I already have it. And so I'm not going to allow my emotions to deter me from making the proper strategy. I'm going to make sure my strategy is properly executed. So there's a 3 loss rule that I will employ, okay? This is a critical part. This is a critical part of helping myself, okay? This is the critical part in helping me be successful so that I can take the generosity of this office so that I can be a solution and not be a problem. Okay? I'm going to make that transition. All right? So does that make sense? Is that crystal clear? So that's what I'm going to do. All right?